Hello and welcome everyone to the weekly Delphian meeting. Thank you for tuning in. So today's agenda, we'll go through the market update. We also have a few earnings trades still out there. And then we'll go through Joe's analysis. So earnings is winding down. So we'll probably put out 2 weeks around the 18th, put out next quarter's plan. So, all right, let's get to it. So market overall, we got SPX, NDX, everything holding in state one, even after a violent down day yesterday. Same thing with all the sectors. You can see everything except for energy is in one. So we did state ones did hit 52-week high. That was on Friday 30th. You can see there. That's the high date. So we did hit highs on Friday, and then yesterday it was down pretty big, but kind of moderating today. High wise, pretty much spot on week from last week, 6618, 6626. So it's kind of flat overall. And like I said, the ones there, we did hit a new, 1 year high on those. So let's look at the pulse here. So you can see that's a high. You go back in time here, like 49, 50s, kind of, there's the previous high, 52, 1. So we did get up, right above that and pretty violent yesterday. We'll see. We'll look at the, resistance levels, support levels, and moving averages and give you a kind of an indicator where we think things are going. Uh, Nothing big so far in twos. Pretty. See if those turn up. Just that was a 1 day thing, but they had pretty much flatlined right around 3%. So nothing else really able to get to state one from there. Uh, Down here, 4 or 5%. So it's really the ones and eights are the key drivers here. Sevens, 7%. So you could, if we do turn down, you could get a nice, bunch of those going into eight. But just kind of see if as we kind of drop a little, see if we can hold that 45 kind of area, mid 40s. That's when we got those big run ups. We just held up above there. So otherwise, we get this kind of big drop and just minor pullbacks, but we'll have to wait and see on that. Still getting some decent highs here. We do have over half the symbols in state one. That's where the highs happen. So still getting good green here. Uh, Minor uptick. Yeah, nothing big as far as the lows right now. But still showing the green here. So we'll see if that yesterday's just a blip. It'd be nice if we can get above kind of those key moving averages for SPX. So we'll go into that in a minute. The 20 days, you can see a big move here, 20-day moving averages. So the belows did jump above the aboves. So that would be first indicator. Then you look at the 50 days. So still some distance there. And then 200 still all clear. No issues there. But let's look at bullish bearish real quick. Okay, so we high here was 68. Last week we were right there, 66. So we'll just have to see if we can hold. A lot of the time, most of the time it does this type of thing. And then on occasion we'll get where it doesn't cross 50 and turns back up. Probably 2 out of 3 times it'll turn over like this. Kind of drop, up, drop, up, drop. So yeah, we'll see if this one's different, if we can hold. Like I said, we'll have to look at the key levels. So let's look at SPX here. State one, 12 days. another 30 on average here. Didn't get near target one. We are below entry price, which is a key level we want to stay above support wise. The one below that, it's right on our bottom of our range, 5,400 area. So that's the bottom of our range. Top would be up here. So in order to get up into here, we'd need to make new all-time highs. We're 56 something. Was the all-time high 666 or something. But I think the key thing to watch here is just kind of this level. We had 1, 2, 3, 4, 5, 6, 7, 8, like 8 days, where it's trying to get above, that 56 kind of 40 area. The all-time highs over here, the 669, but this really ran into problems. So that's going to be resistance level. You know, f- uh, we got the entry price too. We'd have to get back above there. We're right below that, 5554. So we're right below that. So that'll be your first, and then second, and then third level resistance, all-time highs, and then we could no problem. We break through there, getting up into the first range of target one, target two type area. So that's kind of where we're at. SPX. Let's look at the charts. So right now we're above 50. And let me look at the quick price here, 5528. So about what 60, 50 points, and that kind of range above the 50-day. That'd be nice to hold. But I think even more important is that 20-day 5543. So we're below that. We closed below it the other day, and once this 20-day gets broken, that's when these kind of sell-offs happen. I think this was a 1 day barely below that 20, but after that, you know, finished above that the next day. So I think it's kind of important that we get above that 20-day. Otherwise, we can possibly expect this type of action. Violent. We had that for violent day yesterday. And that's where you see these type things, these big reds getting near 20 and the 50. So not out of the realm, being that high in state ones. And I think the data that's coming out this week could push things. Definitely, we got payrolls on Friday, and then we got some PMI stuff on Thursday. So I think that it's going to really tell us where things are. Market really reacting to a lot of this data, and could be violent. So there's the bottom of range. So I give you kind of the resistance. You got 50, you got these highs here, the all-time high, and then support. You got the 50-day, and then you got the 5,400. So it's kind of where we're at SPX wise. 50 days at 54.82. So, and I think we're at 55.28. So still above that, but if we want to get bullish, I'd like to see it get above that, the 20. That's where those big long runs have been happening, at least recently, last year or two. Okay, so it's SPX. Here's Russell following the typical path. I'm not going to say I told you so, but typically from here we do come back up. That's typical pattern. So it's definitely been following that to a T. No guarantees that it's going to keep following typical pattern, but it's nice that it held that entry price going on 43. Let me see where we're at right now on the Russell. So we're about 12 points above that. So yeah, we'll see if we can get that rebound. We're 10 days in, 36 average. We did hit target 1, 2, and we'll just have to see if this kind of follows that pattern. It's looking like it, especially when it's puts the brakes right on that entry price. I mean, you know, the low was 21.43.59. Was that like 15 cents off from the entry price? It held. So that's a good sign, showing support. And you can see back here, really, here, like all those days there, kind of showing real strong support on that level. So this would be very important, I would say, near term, staying above that for the Russell. All right, let's look at the chart. So don't really follow the 20 on here, but 50, pretty much right near that entry price. So 21.37. So entry price is right above that. But, holding that along with the, 50-day, I think is, definitely important for Russell. I'll do the quick lines here of our ranges. 21, there's the 23 top. Definitely called that one. So, below that 50-day, you got, the bottom of the range, 2100. Obviously, it's going to be very critical. But, if 50 breaks, then I would expect a strong test of that 2100, and, we'll just have to wait and see. Okay. Yeah, 10-year hadn't done too much. Talk about the Fed here in a second, but down a little, but kind of between that range, we talked about last week, between that like 4 and 3.6. There's that 4. I would expect these, eventually to start dropping, but it's also, because what the Fed will be doing, but it's also dependent on supply and demand, selling the treasuries in the open market. So, all right, Fed wise, let's go September. Pretty decent movement here. So we got from last week just a little bit more towards 50-point cut. I still think we're going to do 25, but it'll be data dependent. So we'll just have to, see how, the data between now and, 2 weeks. So we'll do the earnings release with the Fed cut day. Yeah, 2 weeks, 18th. So Q3 earnings and Fed cut day. So we'll just have to wait and see. Once this gets over 90, and we get closer, it's pretty much guaranteed. So see which way it breaks. That'll be data dependent, but still, me gut feeling is quarter point. And a lot of these are over ambitious. A lot of the times we've tracked this for a long time now, and they end up getting a little over ambitious on cuts and when they happen, things like that. But this is November, so this would be 75 basis points is kind of, so not too much week to week, but definitely, sliding towards more cuts. And then, same thing here. This is 1%. So, just kind of moving a little lower. So that'd be quite a bit of cutting in 3. I don't know if this was going to happen. That'd be 250s and a quarter. So, but so we got 2 weeks until that. Balance sheet, nothing much, getting near 7 trillion of our COVID starting point. So still think it's like not going as quickly as normal as before. So I think it's still flattening out a little bit. And we already talked about data coming out. So those could move markets. Unemployment could get a big revision. So it'd kind of be interesting to see what employment rate and all that stuff is. So, but that's it for market. I'll open up to questions, comments. Feel free to unmute and fire away.
Yeah, this is Dave. I'll fire away. I'm sorry I was a little late getting here too, but I think we're going to just tread water till the jobs report Friday, and then we're going to tread water until the Fed decides how much they're going to cut.
Yeah.
And all the folks expecting a whole rate cycle to start taking shape, I think might be disappointed, because I think, like you said, the Fed's going to be data dependent month by month, and they're not going to decree any kind of a, well, 4 cuts over the next year is what we're seeing,
Right. Yeah. Yeah.
So I think there's more room for disappointment and a sell the event. We bought the news. We're going to sell the event a little bit if it's just a 1/4 point cut, and Powell says exactly what you were just saying, that they're going to be data dependent. That won't be good enough, I don't think, to spark a new rally before the election, which has got its own set of variables.
Right. Yeah, I mean, these are starting to move. The short terms, starting to come down as far as the 1 years and stuff. Be interesting, once we get, I guess they're, year end predicting like down here for, the short term rates. So that would make it almost like a normal year yield curve for once. Haven't seen that in a long time, but we'll see what they do. I would expect them to be more cautious than, you know, super aggressive unless, something happens, obviously. So,
Yeah, unless there's a surprise. I agree with you. Be cautious. That's why I would suggest approaching investing. Be cautious. Be cautious.
yeah. And lots of volatility expected, I would think, between now and the election also. Fed, you got election, just a lot of stuff going on. So volatilities, yeah. I wouldn't expect it to go down until maybe after things have smoothed out here, get through this election cycle. So, all right, thanks, Dave. Anyone else? No. Okay. All right, we'll go kind of quick through. Not too much earnings wise. So we had two bullish. Those ones have not gone well so far. They've actually turned us from profit to negative, but we still have time on those. So, we'll just have to wait and see. So we got those two. We got two bearish runners. Everything is still up except for that bullish runner. So this one marginally, and then so we had two open trades there, and then vol rise. Got FedEx, and then we also closed one out, the CIEN for small profit. But overall, this one of the best ones. So that and non-mover. So that's it for earnings. Now coming to winding down here. Obviously, let's see if we got how much more trade wise. 1, 2, 3. This one will be, that's a new quarter. So got 3 trades left. All right. Any questions, comments on the earnings? No? All right. I'll turn it over to you, Joe. You ready?
Sure, Josh.
All right.
All right. Hi, everybody. Thanks, Josh. We are on the same page, Josh, on a lot of things. Talking about violence in the market, could be violent, could be violent. Yeah, I think clearly we've got more volatility. I think it's going to continue. I got a bunch of charts, and I'll start with VIX. I know we know what happened in July, early August, but just look at the size of the VIX candles over the last, month plus. And, the market seems, as you pointed out, extremely sensitive to this economic data at this point. This fear of recession seems to still be hanging over, although, the numbers don't seem to suggest that to me, but just a real sensitivity. You mentioned the numbers that are coming up. We got PMI and ISM numbers tomorrow, non-farm payroll. I find it interesting. They adjusted the non-farm expectation way the hell down, based on last month's number. We got $1.14 last month. I think the consensus was, 160, 170. We get 114, and now the market, according to Trading Economics, is looking for $1.20. That's a heck of a downward revision, or at least market expectation. So that's Friday, and then we get right back into the inflation numbers next Wednesday and Thursday. So, and then we can't forget next Tuesday night we got the debate. I mean, we're not going to get. I don't know, that the market will move based on the debate, but that is Tuesday night, so we'll have that to talk about next Wednesday. I think it's kind of interesting. We went through a long period, where the market wasn't all that volatile. Our sell-offs we've talked about have been basically 3 to 4 weeks. We had one in April, we had one in July, had a brief one maybe last December, but for the most part, not real volatile, but I think that has definitely changed. It's interesting. We're doing moving averages. That's what I'm going to pull up today. All of my charts are about the moving averages, and in terms of leadership a little bit, it'll speak for itself, but I think you had this one up certainly with the 20 and the 50. There's the 200 down below. That's the SPX. With the exception of, I think NDX around retracements, I don't think, we're basically in a trading range with most everything now. And, SPX would be interesting to see whether these couple of moving averages hold. Looks like they may, at least for for today. But we've got a double top here, which we can just back and fill. We've got a 500-point range in the S&P, so we back and fill for a while. What's the S&P up 18% already this year? So there's no harm in back and fill. What'll be interesting, certainly it happens every day, every presidential cycle, will be right in the middle of earnings season, when the election happens. And, we know earnings expectations are double-digit growth plus. So be interesting to see whether we just trade in the range, between, now and November 5th or not. But, the highs and lows are basically defined. So you just got to watch the charts to see if, basically we break out to the new highs. I think still surprises will be to the upside if we have them. There's SPX, NDX. The interesting thing about this chart to me, and we all realize it and know it, but here's your picture. It's no longer leadership, and whether that changes, 3-6 months from now remains to be seen. But clearly SPX, basically got within, I think, 10 points of its old high at 5669, on the recent high. NDX, nowhere near really. So, for the time being, the leadership will not be NDX. And again, it's not an unhealthy, trading range here. And, but, as you pointed out, also importantly, with yesterday's violence, we're still in state ones in these things. So, I can't imagine we can have too many more red candle days, certainly not like yesterday's, but even red candle days, I would assume would flip things over to twos, but not yet. There's NDX. I thought I'd pull out, XLK, since this has been our leader, probably going back to November of 22. I thought I'd pull out, in addition to the moving averages. I hope there are enough lines there for you. but the retracements, and basically we got to a 50% retracement off the recent counter trend rally. And let's see, XLK, yeah, I think we're around 211 right now. We traded as low as 207 earlier this morning. A 5/8 retracement in XLK would be down in just over 200 at the 203 level. Again, I'm not going to run through all the retracements in the different indexes, but this one, because it had been leadership, I think is worth paying attention to the numbers maybe a little more closely than some of the others, with the exception of, the S&P. If the S&P breaks out the new highs, then, away we go, and that's 5669. So basically 203 in the XLK would be the 5/8 retracement if we're going to roll over a little bit more. And I would think if the XLK is going to exceed that, then the market generally will roll over for a while. I think SMH is next. And, you're talking NVIDIA, 20% of the SMH. You got Taiwan Semi at 14%, Broadcom at 9%, Texas Instrument at 5%, and then, a bunch of smaller percentages. But again, kind of mirroring XLK, nowhere near leadership at this point, significantly lower high. And, now I think it just kind of back and fills. But, it's interesting to see here where, below both moving averages and that 200-day moving average. Let's see, what is that number? Basically 216 in SMH. It'll be interesting to see whether it tests that and holds. Been a long time. We had the August 5th breach of that. It closed above it that day. So, I think that's another number to maybe keep an eye on, the 216 level in SMH. Really too many lines there. But the 200-day in XLK is really just above that 203 number I was talking about. And NDX, you got a long way to go. And then, Russell, Josh, pointed out the 2,300 levels here, how important they are. The converging moving averages, we'll be interested to see if we hold this range. And, we're up a little bit today. And Dow, holy Dow. And, as we've talked about in the past, Dow is price weighted. So you've got United Healthcare at about 9%, Microsoft at just under 7%, Goldman Sachs at just above 6%, Home Depot above 6%, and a few others. But, of all the indexes, it's the Dow that has, I guess, been the strongest, but, not one that we pay nearly as much attention to. Just kind of interesting. And
hey, Joe.
To that end, yeah, Sudhir?
Did you read that there's discussions of taking Intel out of the Dow?
I have not.
Yeah, there's discussions. I saw some news reports. Intel is the worst performing member of the Dow and the second worst performing member of the S&P 500. The worst performing member of the S&P 500 is Walgreens. But there's talk about removing Intel from the Dow and replacing it with NVIDIA. I believe it was the year 2000 when Intel, from what I read, was added to the Dow.
Oh, okay. Interesting that they're talking about replacing Intel with NVIDIA. Huh.
Mm-hmm.
No, I had not seen that. Thank you for that.
There's no
Intel.
schedule.
Right.
Yeah.
What a disaster Intel has been. Dave?
Yeah, this is Dave, and I've read that too, Sudhir. And it just shows that U.S. investors are just not patient enough about where investment dollars, where the company's investing. The company's investing a lot of CapEx, And investors don't like that because that will impact their returns in the short term. And so they're all bailing because they don't believe, or they're finding a better place to get a quicker return, in my opinion. And I don't doubt them because it's going to take that long. You know, the turnaround from making new plants and, you know, and bringing up a new plant and a new process, by the way, as well. One of the things I heard Intel just today was there's a release that their claim to fame and their regaining leadership in the fab business is on their 118A, which stands for angstroms. Now we're getting into below nanometers, but into angstroms. That process is a new process for Intel, and it's not just a tweak on the old processes. It's got a lot of new pieces to it, and so Intel's having to invent a new process or dive into a new process. They're going to have new tools to, you know, support the modeling for that process. And it's not going to be, the first articles out are not going to be perfect. And that's what Broadcom just said. Well, the first articles aren't perfect. And investors are saying, well, this new process is going to go down the tubes and we should just then bail out of Intel. It's a real interesting story when it comes to like the semiconductor group and, you know, that whole group. And as far as NVIDIA goes, almost the same set of articles I was reading where that author was saying that the S&P has now been closely following the NVIDIA stock price. You know, the price, the curves, moving averages are following. The S&P is following NVIDIA more than anything else, which is a total, you know, if you will, an illogical move, and it shouldn't happen. The fact that it is kind of a notion to be of concern, if you ask me. If we can't break out of, well, the S&P is going to react just like NVIDIA reacts, we're going to be stuck with whatever NVIDIA does for as long as that happens. So I think that's a bad analogy, in my opinion. But if the semiconductors are all following what the leader does, and the two leaders, the big leaders, are AMD, Intel, and NVIDIA. Broadcom, there's some other, you know, secondary players that are pretty important, but, you know, that's what the SMCI is following. So anyway, yeah, Intel is going to have some time to get back into profitability, and investors are just not going to wait for it. Period. The end.
It's interesting, just kind of looking at the chart here, you know, but you know, you got a classic 5-wave, and you know what a disaster in this last gap. But you know, you basically topped out at 50, went down 1, sideways 2. You had a nice long leg 3. Leg 4s tend to be longer in time than leg 2s, and here we are laying down here in leg 5. So probably, I don't know what the implied vols are. Probably a great candidate for covered calls would be my guess. But you know, thanks, Sudhir. I did not hadn't heard that, and I pulled up the Walmart, or the Walgreens, excuse me, which I also did not realize was the worst performing of the S&P. But you know what a nightmare that is, and it just raises questions. This isn't the forum for it right now, but you know, why would Walgreens? You know, I don't know about their balance sheets, but what another disaster. It's just, you know, remarkable how poor the performance is. Maybe have to take a peek at that one of these days and just see if we can come up with some reasons why. But thank you for the info. So what I thought I would do, we looked at XLK, but you know, here's the market. Maybe talking, you know, maybe we're going to be range bound. Again, I would still say if we're going to have surprises to the upside, but I could see range bound for quite a while. So I thought I'd go through each of the sectors just to see how they've performed. We've got our 20, 50, and 200 day. You know, we looked at XLK, and clearly that was leadership for heck, a couple of years almost, and is not at this point. Here are the financials. I mean, they have been obviously rock solid. You'd hardly know that we've had a couple little corrections in the market here. And, you know, the financials to the point above those moving averages where I would think you get a bit of a pullback here, but maybe they're just going to be leadership going forward. I think, you know, on a valuation basis, generally they have been lower priced. And I would guess that's part of the reason why they've been, you know, so strong here. So they're the financials, and just in state one. So, you know, I'm not suggesting we're going to get a state one rally like we had coming out of the November lows, but, you know, could be a good chance that we continue to see leadership out of the financials. The financials, by the way, are, and I in doing a little prep for this, the order of our ETFs on, or the sectors on the homepage is according to their percentage in the S&P. I don't know how frequently they redo their components, but as it turns out, XLF is number 2 at this point at, no, excuse me, number 3. XLK, of course, is the largest by far. That's 24% of the S&P 500. XLF is coming in at 12%. Let's see, XLV, we've got healthcare here. This is actually number 2 at 14% of the S&P 500. You know, talk about leadership. I mean, healthcare and finance. I mean, coming out of those August lows, and even the sell-off into the August 5th low was less dramatic in healthcare. So clearly leadership in healthcare and the financials right now. Next, I think we got, consumer discretionaries. Okay, 10% of the S&P 500. And, you know, the whole talk about inflation and, you know, price gouging and all that business, not buying it. But, you know, what I think is interesting is we've got a state one here, which is probably worth watching. You know, this thing isn't really too big of a mover. So I don't really expect, you know, leadership coming out of here. But, you know, it's trying to hold its 50-day moving average. So we'll you know, see if that happens or not. But that's XLY. And again, XLY is 10% of the S&P 500. Next are the communication stocks, which is 11%. I mean, as I went through these, I found it darn interesting that a lot of these 50 and 20-day moving averages are basically in the same range, and we have a lot of these things testing those levels. Very similar, you know, to the discretionaries. You got a recent state one, you got a little bit of a pullback here, and, you know, I think probably worth keeping an eye on. But again, it's just interesting how these moving averages, you know, are kind of defining current levels in a lot of these issues. Let's see, we got industrials here are 9%. You know, there's been some leadership there as well. So had a pretty good sell-off yesterday, obviously, but you know, the industrials trading at highs. You know, potential leadership coming out of those going forward. XLP are the consumer staples. I mean, so much for price gouging. You know, making new highs. So, and you can see those moving averages turning up. So looks like another area of, you know, potential leadership, the consumer staples. Energy, you know, just kind of laying around. At this point, dead money seems to be a headwind for energy here, and maybe a tailwind for the markets. You know, if energy is just going to continue to, you know, flop around in a little bit of a lower trading range. And, we're basically back into a state 4. So not the best in terms of states here. We've had, more bearish states than bullish over the last couple months there. Utilities, I think we know about this. This has been, defensive for quite a while, and, heck of a run in a state 1 for the utilities. Pretty sad market if that's where your leadership is, but clearly we've got a lot more leadership than just the utilities. But slow and steady to the upside there. The utilities are just 3.5% of the S&P 500. Energy, backed energy is 3.6%. So they are in the lower tier. I'm not sure that I mentioned the consumer staples are 7%. So, quite a range. It's really consumer staples, industrials, communications, consumer discretionaries, healthcare, and finance. Pretty significant, ranging between 7 and 12% of the S&P 500 with, XLK, as I said, way up there at 24%. Here we are with materials, actually the smallest sector, the materials at 2.5%. Just a couple, 3 days ago, traded recent highs in a state 1. So slow moving, not too much to get excited about, but certainly holding its own. And I guess let me see, I had real estate. I may have to pull that up, but I'll go with these. Let me double check. Is it back here? No. All right, I'll go back to where I was. Real estate has held up, pretty well. Maybe I'll pull that up. But as Josh pointed out, TLT had a pretty good run. We mentioned I think a couple weeks ago we were in state 1, and that's why this thing we always want to keep an eye on it. But if anything, seems to be a tailwind for the markets as well. And then IYT, Sudhir, one of your favorites. Just I hadn't looked at this in a little while and just wanted to see. I mean, IYT, you're talking Union Pacific at 18%, Uber at 17%, UPS at 8%. FedEx at 5%, and then a couple of the railroads at 5%. Nothing exciting here, just kind of trading in a range. What I did think was maybe noteworthy, although the last state 1 was a bad state 1, it just has rolled into state 1 in the last few days. So, I don't think we're going to get much coming out of this, but with all this talk of recession, at least, it seems to pop up fairly frequently. I thought it might be worth, checking out IYT, and it doesn't look like recession to me. So a couple more stocks here, some of our favorites. Microsoft, that really has taken it on the chin. And, just, I'm sure that is valuation. And, money rolling into other sectors like we talked about, looks like healthcare, consumer staples, and maybe financials. So taking some of the multiple out of a few of these stocks, and I think Microsoft being one of them. But interesting that Microsoft is banging around this 200-day moving average, which been a long time since that happened. So I think that level is worth just checking the chart, every couple of days if you're prone to do that, and just see whether Microsoft can hold that 200-day moving average, which is basically 410, 411 at this point. A few more. Apple, it's funny, a few months ago, you couldn't give away Apple, and now it's holding up pretty darn well. So big down day yesterday. Again, those converging moving averages, the 20 and 50-day, awful interesting. I'm not sure what it's doing today. Couldn't guess it's up a little bit, but even if it's got plenty of room to back and fill, those August 5th lows give us a huge trading range in almost everything. So, covered calls, you know, selling call spreads, selling put spreads, probably not a bad idea here. NVIDIA, you know, I agree with you wholeheartedly, Dave. I don't think it's an NVIDIA market anymore. I think, you know, their numbers were sensational, but the expectations for the street were, you know, beyond. And so this thing, after an historic run, should back and fill for maybe a hell of a long time. And, you know, will the market be in a trading range for a hell of a long time? I don't think so. You know, could it happen, you know, between now and November 5th? Yes, but, you know, you got a bit of a trend line across the tops there in NVIDIA. Big chance for this thing to just kind of go sideways for a while. I heard something last night, Josh, I don't, you know, that, and I thought this was irresponsible. I'm not going to mention, you know, some trading outfit that was mentioning it, but they were saying that there could be an antitrust case coming out against NVIDIA. And they were talking about how it was trading down at 105, I think, last night after the market closed. Anyway, I haven't seen or heard anything about that except for this one site that I happened to see last night, and that definitely caught my attention.
Haven't
Have
heard
you
it.
seen anything like that, Josh?
No.
No, I thought it was bizarre myself, but anyway, it's just something that somebody. Yes, Dave.
On that, I think it was Supermicro that Hindenburg launched a short sale note out against, and that stock just cratered. And it was
that was a few weeks ago, wasn't it?
Pretty much hyping NVIDIA for everything, and maybe there's some tie up there, but I did not see the antitrust case against NVIDIA. I'd be surprised about that one. However,
me too. Me too.
I would not be surprised to see antitrust cases come up against some of the companies that are, you know, really hyped the AI trade and are having a hard time proving it. I can see more short sellers coming out against those companies. And those are the ones that I think are taking a hit out of the NASDAQ and the Qs. The generative AI companies are having a hard time proving the ROI on the generative AI investment that they're making. So that's still TBD, but I think that's the froth has come off the top because of that. Because there's now, well, show me where that ROI is, please. So
agreed. And I think what's his name, Zuckerberg did kind of quantify. I think we talked about this a few weeks ago. Quantified, you know, their benefit to the AI, and that stock popped immediately. So yeah, in almost all cases, TBD, as you said. The Supermicro, Dave, that was a few weeks back for sure, right?
Yeah,
you know,
it was a little while back.
The short selling, yeah.
But did you know that Meta or Facebook makes 95% of the revenue from ads, not necessarily from technology or selling I don't know what their chatbot is for AI, but they have one too. But they make most of their money from selling ads, and I see selling ads on almost everything going up to try and get back some money from Google, from everybody that's a player in that area. There's more ads on everything that they're doing, and that's how they're trying to get some money back from the AI investment that they're making in GPUs from NVIDIA, for example. So, anyway, that's my observation on the AI trade. I think it's fading, and you know, AI is just the AI is software, and none of the companies that are making lots of money are software only companies. I guess you could say Google is, but they're social media companies where we all have eyeballs and they're selling ads to. So if they can use AI to sell more ads, I guess they will.
Yeah, as you say, TBD on a lot of the AI
TBD.
stuff for sure. And I think that, you know, again, I mentioned earlier the convergence of the election coupled with the earnings cycle and the pressure really, these expectations for earnings are solid double digits. I think it'll just speak to, continued volatility in the markets. And let's see, I got maybe one more here. Two more. There's NVIDIA, right? There's what I was looking for earlier. The last of the sectors on our list, although it's the second by size, the real estate at a little over 3%, and essentially, it's done great with the rally in TLT, and been some leadership there. So, basically real estate, utilities, consumer staples, the consumer discretionaries, healthcare, and financials are the sectors keeping this market, rocking and rolling, basically. Lastly, I will just go to, where is it here? The AAII. I had it, we're close. I mean, I've seen a number of headlines where, everybody's bullish. We're close to the high for the year, over a 52-week period. I think it's just over 52. There it is, 52.9. We're at 51.2. Is it a brief excuse for a little bit of a sell-off? Maybe. Josh pointed out, and, it certainly caught my eye. We don't get many yellow boxes, on our market pulse, but we got one yesterday, with the state ones at 52.18%. I went back and checked the last 3 times we had state ones, at the top, and there definitely no consensus like, oh, it's a top, it's a bottom. The last one was on March 28th, and that turned out to be a short-term high. We all remember, pick your date, March 7th for, I think, NVIDIA. By March 28th, the market had sort of started to roll over. I think the S&P's kind of just started rolling over then. And, we saw it off into April 19th. So in that instance, it turned out that, okay, it was a little bit of a top. The 2 previous, and actually it was far more than 2, it was a grouping of state ones at their high for the year. And that was late December, early January of this past year. And obviously that was not a high in the market, but, much closer to a low. So no consensus coming out of that, but, we don't get the yellow boxes very often. And, I like to see them from time to time. I don't take anything away from this recent, high. I think we'll have a trading range going forward with surprises to the upside. So, that's it for me. Anybody have comments? I mean, lots of numbers over the next week and then debate next Tuesday night.
This is Dave. I just want to thank you for all the charts. And the one you've been mentioning, the percentage of the major indices that the sectors are in. Is that like a chart on FactSet, or did you create your own spreadsheet for that?
I just went in and did some homework, Dave, and and realized that, maybe they, recalculate them every quarter, but
I think that's a good thing to keep. I think that's a good thing to keep track of every quarter. I was going to ask you if you could share, if you did your own spreadsheet on it, if you'd share that with us, because I think that's something I'd like to try and remember until the next quarter is out. That's good stuff.
And one thing, it was a few months ago where we, rather than just go in alphabetical order in the sector overview on the homepage, we did, change them according to their percentage in the S&P. We'll keep that updated, and I don't have a spreadsheet on it, but we'll try to keep you up to date with it.
Yeah, there might be one somewhere. I'll look for one too. But thanks for providing all that info. It was really good stuff. Thanks.
You're welcome. Hopefully it's not too many numbers. Anybody else? All right, Josh.
Yeah. All right. Thanks, Joe. Anyone else? Last call for questions, comments before we wrap it up. All right. Thank you, guys. We'll do it again next week.
Thank you.
Thank you.
Thanks, everybody.